Hi everyone, this is Aman from SMC Wolf FX, and in this video I'm just doing a quick reflection on the week ending 6th of Feb 2026, so the very first week of February. In this week, I only took one trade, which was a manual close at break even, and I'll show you guys that trade in a moment. But very quickly, if you guys are interested in joining this private Wolfpack area of my Discord, it's very simple to join. Just head over to my website, which is www.smcwolffx.com, and just click the join Discord button, and it's a fairly easy process to join. Or if you're already in the my Discord group, you can just go here, how to join Wolfpack, and there's a link here which you can also click, have a read of this, and yeah, anyways, let's do a quick recap of what's been going on. So yeah, it's been a fairly quiet week. I've been pretty busy away from trading this week, so I wasn't able to give my 100% focus to the charts, but regardless, it was a win. Capital remained protected and we survive to trade another week. So we started off by having, I saw a GBP USD sell opportunity. The analysis was fairly good in the morning. So the London trading session, price traded above the Asian highs and it began to reject away. And we had this area of imbalance at the quarter level of 1.3675, which I was anticipating price to at least come back up and then to pivot back away from this area. And then the ultimate target, of course, for the session was, well, you can't see in this image here, but there was a low here, which was the Asian low. It was equal lows, and it was also the previous day low. Unfortunately, that trade continued to move away, and it went to target, so that bias became invalidated for me. And just looking back at it now, I feel like I had to be quick on that, because of course you had this impulse candle towards the downside, this following candle, and it seems like this candle just wicked above into this imbalance and began moving away. So you had to be quick and take an impulse entry of this, pretty much this following candle here. But yeah, it is what it is. It happens. Anyways, moving on. There was a bullish move on gold. I was looking at riding the bullish trend, which we've been seeing within the markets. And of course, it never came back into this retracement area. But basically what I was looking at, this key level of $4,900, we had some good price action. We had a bit of 5-minute imbalances. So I just simply thought, as soon as price retraces here, I could see the market going towards the upside, towards a key price level of 5,000. And yep, so I zoomed out on the 1 hour. Basically, I saw this area of imbalance, and I just thought to myself, gold is a bit volatile at the moment, and price could very much easily wick a bit lower into this 1 hour fair value gap area, and just thought to invalidate that idea. So never really went ahead with that bias. And also quickly regards this one, of course I won't show it in this video. You can go back onto your charts and just have a look on this day, which was 3rd of Feb around 10 a.m. Just take a look at what happened to the markets. Gold was pretty much sideways throughout the entire New York trading session, and then I think it was towards the end of New York it began to actually trade bullish towards 5,000. So it was a good choice to stay out, because I don't like trading consolidated markets anyways. I want to be involved in the market when there's least resistance occurring. Anyways, on the 4th of Feb, there was this bearish bias that I was looking at on GBP USD as well. And again, the technical analysis was amazing. It was going with the trend. So price has traded into a daily fair value gap area. We've got this, I guess, let's say we assume liquidity sweep, and then we broke below. So this is the actual close of the 15-minute candle. and we broke below this key level of 1.37, and my bias was I was anticipating price to retrace back up into 1.37 to then take it another bearish leg towards the downside, trading towards the previous day lows where we had some flat closed candles. So again, I see this as a area of liquidity, a magnet of price to trade towards. So price did retrace back up, and my limit order at 1.37 did get triggered. But however, so in the screenshot, this is 10 minutes before red folder news on this specific day, on the 5-minute chart. So this is a screenshot of the 5-minute chart. Price was just of course we tapped in, but it just stayed at the 1.37 key price level, and being 10 minutes before red folder news, price was being held, and I thought the wise decision is to just come out of this trade manually entirely at this price point, 1.37. So it was a break even, yeah, we came out of this trade keeping our capital protected. But when I went to the charts after, let me show you guys that now on GBP USD. Of course, there's no analysis on here, but here was a 1.37 level. So the 5-minute time frame, it became into consolidation before red folder news, which happens. But after the news had printed, we gapped down. So as you can see, this candle 25 pips gap down, and continued trading bearish towards our ultimate take profit area of the previous day's low. So that was a shame, but again, it was a win because again, I've experienced it a lot, and I've been bit quite a lot as well when trying to hold over red folder news. It's just unnecessary risk, and it's always wise just to come out of any trades that you have open, especially if the trades are still around your entry price level. There's no point putting your capital at unnecessary risk, and especially when you take into account potential slippage and spreads risk as well when red folder news occurs. And that's all it was for the week, honestly. So that was the only trade that I had taken. It was closed at break even, and that trade did carry on moving towards the downside, but I just didn't bother getting involved in the market at that point. But yeah, so I guess the key lessons from that, I did a quick reflection, a few notes here, that of course not every week needs to be active. Being break even, it's a position of strength, not failure, because of course another priority, especially over red folder news or when the markets are extremely volatile and unpredictable, your priority should be to protect capital, because you don't want to try, I mean, it'll be nice if you can get involved in every move possible, but there's no point taking unnecessary risk. Only follow your system. You want to stay disciplined, because that's what keeps you in this game for the long term, because it's a game of probabilities, and if you got a system which gives you a good enough probability to stay profitable, you want to stick to that trading system. Anyways, I hope this reflection was a good video to watch, and I'll see you guys in the next video, whatever that video may be. Hope you guys have a lovely weekend, and catch you soon.